Hi traders, this is Cynthia of Day Trade Forex, and I'm going to give you a short follow-up video for using the currency strength meter template. I'm going to start with the basic template because it's a little simpler, and I'm going to review the rules again. And the main thing is that I want to explain why you cannot use a currency strength meter alone on a blank chart, and why you need some sort of charting or trading system to interpret entries and exits. So I'm going to show you starting with the New Zealand dollar in the 30-minute chart, and then I'm going to show you the entries for the buy and sell trades and how the entries correspond with the RSI momentum window down at the bottom. And then I'm going to switch to a daily chart and show you why some of these entries were not really very good. The New Zealand US dollar ranges most of the time, and in the beginning of this chart we can see a big breakout here, but that's a little bit on the unusual side because if you look at this range in a 30-minute, it's a pretty narrow range, and so the New Zealand US dollar for me is not really very tradable, but it's a great example of a chart that very rarely breaks out and usually trades in a range, and how you can identify that, because actually it's a little hard to identify breakouts unless they're actually happening. So in this case we're just going to review this chart and then switch to a daily chart and see where on a daily chart that these green and red lines actually occurred, which we thought in this lower time frame, in a 30-minute time frame, is really the smallest time frame where you can actually see the trend. And anything lower than that, like 15-minute, especially 5-minute, you can't see the major trend at all. So the 30-minute chart for me is very valuable, and you can actually even scalp out of a 30-minute chart and have a better win ratio because you're actually able to see the range, and if the momentum corresponds, then you just would have a better success if you like to scalp, actually scalp out of the 30-minute chart. And of course I like to look at the lower, faster time frames anyway to make sure I'm getting the better entry. But I like to watch everything in the 30-minute chart. However, that's not how I start my trading day. The way I start my trading day is by looking at daily charts, because only then can you get perspective of where the price is at in relationship to previous days. And so I think the daily chart to start out with is very important. But for this exercise, I'm going to start in a 30-minute chart because I've identified some great entries here. The first one here is a definite breakout, which actually is pretty rare because even if you go back in time, you don't have that many breakouts. Here was maybe a nice little climb, but it wasn't exactly a breakout. However, if you had entered right around in here, you still would have gained some pips. But if we use your crosshair, and you really need to learn how to use your crosshair, if you had entered here when the price actually broke through the upper red resistance line, and say you got out maybe here, that's only 15 pips. 156 is actually 15 pips. That's not great. So you can see that the range here is not very big, so you need to learn how to measure the range so you have an idea of what your potential can be. This range right here is 9 pips. It looks like it hasn't changed much. 9 pips seems to be the most average range size, so you're not going to really get very much out of these trades in a New Zealand US dollars pair. Now here, somewhere in here, you could have entered, and there's your exit, 20 pips. So maybe after spread you would have gotten 20 pips. So that's okay, but that doesn't happen very often. Now In the momentum window, this is the RSI momentum window. This is one of my favorite momentum indicators, and I like it because it's color coded with everything that's happening in the main window. But if you notice right here, I'm going to drop my vertical line in right here for a buy. You notice that the RSI has crossed or is around the 50 RSI level. These are the levels here. These are standard levels for RSI. So right around the 50 level is where your trigger is going to be for your buy or sell trigger. You want the price to be right around the 50 RSI level. It doesn't have to be exact, but just right around there. So it crossed a little bit earlier, which is actually better. It shows momentum. This is a relative strength momentum. So 50 level is fairly strong and is actually probably optimized for a good buy or sell entry. So right when you see the RSI, it's a little bit leading actually, and you can see it turned up, sloped up here. Even when the candle here was red, the RSI is green and sloped up, going up to the 50 RSI line. So it's a little bit of a leading indicator. That's why one of the reasons I like it so much. But I have it set on a 7 setting, and 14 is average, but I like half of that. Here you can see that the RSI crossed the 50 RSI level line, and then the price followed. The price action followed, which would have been actually a perfect entry here, and you would have had the green arrow appear at some point. It can be a little late, it can be a little early. It's not perfect. It is just an alert, but it's also a confirmation. When you're already watching the RSI, then if the green arrow appears and the price moves up pretty strongly, you can get in when price breaks through this red resistance line. And so your entry would have been somewhere around here. And your exit would have been when the RSI turned red. It's extremely overbought. RSI is a momentum indicator, so it can show overbought and oversold, which is really important. So when the RSI is very strong like this and moves up above the 70 and 80, sometimes even to the 100 level, but then turns red, that's a sign that the momentum is dropping off and you should exit your trade. So here, if we had exited, we already see a red candle, but the RSI was a little early. It showed a drop up of momentum before the candle even reflected and turned red. So that was a nice little 20 pip trade. But then the range goes back to being very narrow at 9 pips, which is totally untradeable. So you could try many times to get in and out according to this template, but with this pair, because the breakouts are so rare and the ranges go on for so long, that I just don't consider this a very tradable pair. Now here you had this big breakout. This pair doesn't do this very often, but look at the RSI. It was already very strong. Here's when it turned up and showed increasing momentum, increasing buying pressure, and then it dropped off a little bit, and then this big push, the RSI was already at 70-80% level. That's very strong. So when this exploded, because the RSI was so strong, that was a clue that that was going to be a good trade, and it actually was a very good trade. The candle itself, from when it broke through, was 58 pips, so that was a nice breakout. That's what we would love to have all the time, but it doesn't happen all of the time. For most currency pairs, a breakout happens 20% of the time, and then the price ranges in consolidation for 80% of the time. So finding breakouts is very difficult. However, that's why I like the RSI momentum indicator, because you can see that the RSI was very strong, and that was a clue. When you see the RSI that strong and price move in a direction where it breaks support or resistance, that would be a tradable entry. So that was very well rewarded. Then it went into a consolidation. Here's another entry here, and the RSI is above the 50 level. Let's see if I can measure how far this went before the RSI turned red at the 80 level. But then it stayed up there, so it pushed a little bit higher but then came down, but it didn't go that much higher because the momentum had already dropped off. So say you get in somewhere around there. Here's your first red candle. That's only 7 pips, and if you had gotten out at the top of this price when the RSI had turned green again, that's approximately 20 pips. So staying in the trade when the RSI is this strong sometimes rewards you, but you never know ahead of time. But in this case, if you had stayed in, you could have gained double the pips. And then the RSI drops off very shortly, and the price breaks through the support here of this black line, and it broke through this green support. So you had a red arrow appear, and the RSI had already crossed the 50 line. So that was a nice short entry, and I'm going to use my crosshairs and guess that I got in right about there. And right about here is when the RSI in the bottom window turned green, so that tells you that the momentum has completely dropped off. That's the time to get out. That's only 17 pips, and then it goes back to this very narrow range again. So you have to anticipate that if you have a move that's 20 some pips, there's a 13 pip range, so the range is increased a little bit. But you have to anticipate that when you have a fairly strong move of about 20 pips, that after that it's going to go back into a range condition. Now here you have another RSI level broken at 50, which is the sell trigger, and the candle price broke through this green support, so that was a nice strong entry. And if you had gotten in about here, the RSI actually at the bottom of this doji candle, that was only 10 pips or so. So that again is not a great trade. But this is a perfect chart to show you how to determine ahead of time, when you look at these currency pairs, measure the channel. And this is a 12 pip channel, so the channel is increasing in size. That means there's a little more activity in the currency pair itself. Now here's another sell. The price broke through. Actually, this is a very interesting one of the ways you can use a currency strength meter is to trade the fade. And that means up here, this is a resistance channel. This is a resistance line, and the price broke through the resistance, actually going up but going down also. But this is not really very tradable, but you're trading the fade when the price breaks through this black resistance line and you get a red arrow, plus you get an orange dot, which you can't see very well. It's hidden behind the arrow. So that was a very strong movement to the downside. And even though the price has been above the green channel line, which means you're only interested in buy trades, when you see a red arrow and an orange dot appear and the price breaks down below this black resistance line and then it breaks through the green support line, that's a very strong move. And here you can see the RSI is sloping down. This arrow in this big bear candle actually happened before the RSI hit the 50% line. So that's okay. It's never perfect. It's never going to be perfect. And then you have the RSI very oversold here, hovering and changing color right around the 30% RSI line. This is the 30% RSI line. This just means when you see the RSI hovering, changing color, it just means there's no strong momentum and you may as well get out of the trade. There's no reason to stay in a trade when the momentum has dropped off. So say you entered this sell trade right when the price broke through, you get the big red arrow and the orange hot dot alert, and then somewhere down here it has a long tail, so that was a 24 pip tail, but then the candle turned green, so that's 22 pips at the bottom of this long green tail. At that point, when you see the RSI turn green and is very oversold like it is down here, right here, just get out of the trade, because this was an hour and a half, and at the very most you would have gotten about 20 pips. So, well, there's 15 pips at the bottom of the candle body, 16 pips, 15 pips, but at the bottom of the tail, 23, 22. So at the very most you would have maybe gotten 20 pips out of that move. So this was called fading the trade. The trend has been up, but then there's a big push down, and that's one of the ways you can trade this template, but that's really more of an advanced technique for advanced traders. I wouldn't recommend newbies trying this because you can get burned very often. But the clue is that the RSI colored line is somewhere around the 50% level. That shows very strong momentum to the downside. However, you can see a continued push to the downside here until you get a green candle and the RSI down at the bottom. However, that's only another 9 pips. Now, in some other currency pairs, that could have been 20, 30, 40 pips, but in the New Zealand US dollar chart, it doesn't move that much. So sometimes when the RSI is at 30 and drops down to 20, that's an additional X number of pips for you. So you could have taken a re-entry sell trade here, and it stays very weak. The momentum is very weak, but then you had another big bear candle here which pushed down, but then again the momentum, it's very low at the 20% level, but then the green line crosses above the 30% level, so that tells you momentum is picking back up and you're done taking any sell re-entry trades. So from the top of this to the bottom, if you had stayed in the trade at this point, that's 34 pips. When the momentum starts to pick up and crosses about 30% level, then you've already lost a few pips. Most people would probably get out about here, and that's 30 pips. That's still pretty good. Let's check the channel. This was the last long, really big drop. See how wide it is at this point. That's 11 pips, so it's still not a very wide channel. This is the last sell entry, so you get a big red arrow and an orange hot dot alert telling you look for a sell entry. You'll get the alert, look for a sell entry. And if you had entered when it price broke through the black support line, and right around here is when the RSI in the bottom window turned green, that's 11 pips. So if you're willing to scalp this and go for a target of 10 pips at a time, but keep your eye on it, you can get a lot of 10 pip wins. But for me, that's, you'd have to have a pretty big lot size and a pretty big account to scalp for 10 pips at a time. It's not really worth it. And then let's see what the range is of the channel. That's still 11, 10 pips. So that gives you a clue, if you're scalping, how many pips your target should be. So you could do a set and forget. Whenever you get the arrow and the hot dot and the RSI is right around 50, you could sell or buy and just put your take profit at 10 pips and just have it be a set and forget trade. And you can probably scalp a lot of 10 pip trades doing this way, but it's not really, for me, it wouldn't be really worth it. You have to always consider the risk. A 10 pip gain is not worth a higher risk, say a 20 pip stop or a 10 pip stop. That's a A 10 pip gain just is not, it's not a great risk to reward ratio. Your potential gain is just too small. So here are the rules again for the currency strength meter. So now I want to point out to you that looking at a 30-minute chart is not the way I start my trading day. The way I start my trading day is by looking at daily charts. So let's change this 30-minute chart to a daily chart. Let's take a look at these trades that we identified. We identified 3 buy trades, and let's see how far they actually went. This was that first very strong trade, but we were at the top of the resistance black line, so we got in at, this was the real entry back here, and somewhere in here was the red line. It's not really showing up here, but this was your real true entry on this day. 3 days before, this was a little bit of a pullback, and then the price pushed higher. But look at how you're at the top, you're actually trading, breaking through the black resistance line. So, and it went up to the Fibonacci extension target, the very first one. So here, according to the Fibonacci extension, this was your swing, because the swing shows you most recent support and resistance. This was the lowest point, this was the highest point, so it drew this little dashed red line, and then at the highest point you get a hot dot, my signal hot dot, which shows you often the bottom and the top, and it's very reliable in a daily chart. As you move to the lower time frames, they become a little bit less reliable, but whenever you're in a higher time frame and you see a green or an orange dot, that's showing you this is the bottom, this is the top. And the Fibonacci extension identified the bottom low as a swing. Price bounced off of this and swung up, and then it hit the top swing. This is the top price. Then price pushed up on this day that we had entered. Price pushed up. Well, I can't really tell if it pushed up that same day to the first Fibonacci extension target, but it certainly did on the second day. But you don't need to be buying at the top like this. You just don't know how strong the momentum really is, although we can see down here the momentum is very strong. It's pushed above the 70 RSI level, but right around in here it's very overbought, right around the 80 RSI level. So you're kind of buying at the top of the price range if you look at a daily chart, but looking in the 30-minute chart you would not have known that. Now this red sell trade that we took is kind of what we call fading the trade, fading the trend. And so we sold off the top of this black resistance line, and the RSI is red and coming down, but it's still pretty strong. So this could just be a temporary pullback in price because the RSI is very strong. I would not consider a sell trade. Looking at the daily chart, I would never consider a sell trade until the RSI pushes down to the 50 RSI line. Because in a daily chart, you can basically just trade from the RSI oversold down here around 20 or 30. When it hits 70 or 80 and turns red, then you get out. So you could have actually bought right off this support black line when the RSI crossed up above 50. That's where you have the green arrow. In that case, on a daily chart, I don't know where your entry would have been exactly, but here's when the orange dot appeared. That's 98 pips. But at the top of this doji, that's 130 pips. So maybe if you want to trade in a daily chart, you could set your take profit at a fixed 100 pips. That's if you get a good entry. So if you see the RSI drop off, just exit your trade because you'll be giving up or giving back pips at that point. So that's how I start all of my days, looking at the daily chart. This is just the basic currency strength meter template, and my next video is going to be how to read all of this in the pro template. Thanks so much for watching, and we'll see you in the next video.